What's going on, everybody? 360 Digital Closing Bell here. I am your humble correspondent, Michael Tanner, joined as always for our week that was in energy, episode number 28. If you're listening to this, it is a beautiful June 26th, Friday morning, hopefully before the markets open. As always, I am joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com. Stu, how you doing today, my man?
I'm doing fantastic. We're having a great day.
And we have a great day. It's been a great week so far. Like I said, if you guys are listening to this, the markets are probably just opening up on Friday morning. I mean, it's been a crazy week for oil. We started out at 40, and we're probably going to finish somewhere a couple dollars lower than that. So we're going to dive into all of that. We're going to rip around the patch real quick, cover some of the stories that happened, what we think you need to know. We'll check in on the levels for crude oil. EOE, DOE, crude inventory numbers are absolutely insane. So we'll make sure to cover that and sort of what that means for the outlook. And then always we'll check in with our 360 official, non-official fund. It got hammered this week. One of our biggest winners, Bonanza Creek, down huge. So we'll get into all of that. But first, guys, I need to tell you about our friends at Adam 18 Energy and really what they're doing for social risk when it comes to the energy sector. If you're an executive or you work in a management position or leadership position within oil and gas, and you are not concerning or not thinking about ESG, you're really doing yourself and specifically your company and your employees a disservice. Because social risk isn't just community opposition development projects. It's everything from the success from the divest from fossil fuels movement to the investor engagement on your ESG programs to individual states setting crazy ambitious climate and decarbonization agendas. Social risk seems like it everywhere, and really it's moving fast and multiplying like zombies. If you're playing that new Call of Duty Zombies game, you know exactly what I'm talking about. And that's why your company needs a strategic partner to help you assess and prepare for all of the shareholder and institutional pressure on your peer companies, aspirational regulatory changes that are driving energy policy and perception where you are headquartered and operate. Because depending on where you're headquartered, you might there's just different rules. You're in Colorado versus Texas. They might be a little looser down there than they are if your headquarters in Long Beach, California, which you probably I can imagine there's some regulation difference there. If you can imagine, humor me on that one. There's also anti-gas, climate, divest, and local community organization opposition that really impact your operation. Adam 18 Energy is the leading consultancy helping oil and gas companies future-proof for all of this social risk. They're led by Tisha Schuler, who is awesome, and she's also the former CEO of the Colorado Oil and Gas Association. And so credentials are fabulous. She's just a wonderful human. If you haven't had an opportunity to sign up for her weekly emails, which is sort of kind of a glimpse behind her brain and inside and give you an idea of what she's thinking about, I highly recommend doing it because guess what? Your competitors are doing that. Check out everything for Adam 18 Energy at www.energythinks.com. And please sign up for her weekly emails. Also, guys, just subscribe to our show, 360 Digital Closing Bell, iTunes, Spotify, Entercom's YouTube channel. The best way to stay up to date on all of your energy finances. We are live on YouTube every single day for about a 10-minute digital ticker show where me and Stu sort of cover what happened in the overall markets, but specifically from a U.S. shale perspective. Please follow Oil and Gas 360 on all of the social medias, Entercom on all of the social medias. Check out the Oil and Gas 360 news desk, which you can see behind me. The best place. It's literally a one-stop shop for energy news. Oil and gas. I want to get that slug changed. Can we get oilandgas360.com/news desk? Is that a slug we can get?
I think we can sure get it done.
Well, this, we won't announce it yet, but we're working on it. And if you listen to the podcast, you get a little inside scoop there. You can also connect with me and Stuart on LinkedIn. Best way to get a hold of us. I'm always on LinkedIn. You can get a hold of me anywhere. We're not hiding anything. My email will be in the show notes. Reach out to me if you have any questions. If you are also not following the Energy 360 podcast on iTunes, Spotify, or YouTube, I highly recommend doing that right now. The best place for all of your energy thought leadership. We had a packed week this week with a bunch of interviews, and we have a crazy schedule coming up. What does the schedule look like next week? What are we running?
It is crazy bad cool. We have, let's see here, Energy Net dropping Monday, June 29th. That was a really fun interview.
Yeah.
Gus and Anastasia.
And we did that yesterday. That was nice.
Then on Tuesday, we have Andrew, the CEO and president of Data Gumbo. That was really, really a lot of fun.
If you're interested, if you're a hardcore techie, not quite your interview, because we didn't necessarily get nitty gritty into blockchain and all that. A lot of what we spent this interview was sort of laying the groundwork for why you should even consider blockchain in the first place. Because I think that's the biggest sort of step, as Stu mentioned. A lot of people hear blockchain and just curl up in the fetal position. So I think our goal was to really sort of solve that first issue of trusting the blockchain before you can move into all that other stuff. So I highly recommend checking it out. He's a great guy. He looks he's a better looking version of Stu.
Oh, absolutely. And a lot smarter. And on Wednesday, July 1, we have Gareth Fawkes Jones. He is from Spain and very much a energy renewable expert. We thoroughly enjoyed his conversation.
Yeah, international as they come. Was born in South Africa, but now lives in Spain. Did some work in. He's been a world traveler.
And married a young lady from China,
yes.
Chinese, and very, very world renowned. I just got an email from him. And also Tony Heller. We are recording that one today or on Friday. And it is looking forward to that one. He is up in there and has a lot of YouTube followers. So I'm looking forward to getting that one released on Thursday, July 2nd.
Yeah, and I know we are recording one next week that you have been working a while on next Wednesday. So I won't announce anything quite yet till we get that one canned and you see that in the commercial. But I know we've got some exciting. So please check out all of that stuff. The Energy 360 podcast. You can find iTunes, Spotify, but that's a long intro, but we appreciate you guys holding with us. And I think it's time. We just got to whip around the patch now and sort of cover everything that happened. I've got a couple stories. Stu's got some stuff from the international news desk. If you listen to my podcast on Monday, you saw one of my biggest themes for this week was production coming back online. And we referenced a couple different notes from both Parsley, EOG, and Continental that dropped over the weekend and last Friday, just about how they're beginning to bring on some of that production that's coming offline. And my thesis was I think we're going to see domestic crude oil production continue to rise, and we might get back, not get back to where we were, but we might see a more of a V-shaped recovery and just depending on if oil prices continue to step. Well, this week, Bloomberg comes out and sort of gives the anti-case for that. And why I like reading it is because it has some data from some of our favorite friends over at both Inverness, specifically Bernadette Johnson. So anytime she gets quoted, I'm reading. And so that's partly why I took a look. And really, if you listen to the show 3 weeks ago, we covered, the whole drilling versus production conundrum, where new drilling that comes online really is what drives the growth in production. As we know, when you frack a well, the declines are so steep. Month 1 versus month 12 doesn't really look that way. And I think most people sort of get that. And really what it sort of comes down to is I think when you look at what this looks at, and basically their thesis was that if the outlook, looking out and this is sort of the quote that pulled, that's sort of the anti-case. Looking out 18 months, U.S. output will still be around 16% below its peak. This is 18 months out. We're talking this is 2022, basically. 18 months out from now is 2022. Still going to be 16% below its peak in February, according to the average of 5 major forecasters surveyed by Bloomberg. It will probably be at least 2023 before U.S. production again hits its record close to 13 million barrels a day. So, I'm probably wrong. I mean, you read something like this and it definitely not sobers you up a little bit, but it kind of puts into perspective what all that new drilling stuff and what this new drilling says. And one of the biggest quotes that I pulled out of this, another one that I thought was super interesting, if you scroll down here at the bottom, this will be available on oilandgas360.com. If no new wells are drilled, the U.S. production would drop by 35% in just 12 months, about 7 times the rate for the global oil industry, according to our friends at Inverness. And what do we always say about them?
They got data. If you want data and make a decision worth millions, use Inverse.
Oh, no doubt. And that's a lot. 7 times the global rate.
Can I throw a side note on this?
Of course.
From our conversations, your conversations, and Bernadette Johnson. It is, if you take that much of drilling and not able to come back, one of the side effects of fracking is natural gas. And so if you take a look at natural gas not being produced as a side effect, that is another factor that Enverus has looked at for increasing of prices. And so you take a look at our interview with Rob over at Goodrich Petroleum, being 100% gas play, 99% gas with huge plays in the Haynesville. You're going to start talking about some real impact there. Sorry for adding that in.
No, I think you're exactly right. If you're in a situation where you're a primary gas player, you might be okay. I mean, the problem is some of these shale wells aren't coming back online as quickly. And I'm just waiting for the natural gas price to continue to rise. I mean, I get that it's a summer fall thing, but the weakness in me as just somebody who looks at it from a technical standpoint doesn't look very good. Now, obviously, seasonality, I think, we're going to have a much better idea of what the natural gas outlook looks like as we move into quarter 3, quarter 4. But I mean, we're almost coming to quarter 2. It's sort of funny. We just got finished digesting quarter 1 earnings. Quarter 2 earnings around the corner here. We're 2-3 weeks away from getting real busy here on the podcast, and I think that'll show an interesting story. But basically, I think we've laid out over the past week 2 cases. If you're bullish on production coming back, there's a case for it. If you're bearish on oil production coming back out, Enverus, Bloomberg, they just laid out a very, very interesting case. And I think if you look over, say, what the top researcher companies are thinking, they think it's going to be a weak recovery, even if it does sort of kick back. I mean, they still see, like I said, and I mean, here's the companies they surveyed: Rystad, IEA, Genscape, Enverus, IHS. Yeah, they probably know what they're doing. They probably know what they're doing. So again, I think it just covered the other half. It'll be very interesting. I mean, when the EIA numbers this week were shocking. It was very, it was very, very odd to see. But I just wanted to mention a lot of that stuff along the production note, because I think I wouldn't say there's 2 sides to the argument. I think most people are on the production's going to be slumping, but you might be able to make a case for, hey, we might be able to maybe grow a little bit faster. But I mean, some of the coronavirus stuff that we're recording this on Thursday, so we can get this out to you before the market opens. And yesterday, so that was Wednesday, we ran on the closing bell. I mean, it was 800 points on the Dow, down solely due to the fact that there was a 5% positivity rate increase in Florida alone. So I mean, you could talk about panic selling or how much this can flip. I mean, we could have a second wave next week, in 2 weeks, that nobody knows is coming, and we could see, we could see 20,000 down. So it's again, a lot of it's I'll say it again, Stu, unprecedented.
I'm about to curl up in the fetal position.
I couldn't get you. So another bullish, if you're a perma bull, another article I saw, not really an article, it was CitiBank came out with their new long-term research, what do they call them? Research reports done by Ed Morse, who's their head of commodities over there at Citigroup. They're looking at $60. Now, this is Brent. They're looking at 61 Brent here coming up January 2021, which could be interesting. I mean, which is a little, I mean, it depends how much you like and play WTI spreads. That probably means we're 45, 47 on WTI. When you come to that point, that's probably, if you do the math on there, this is more of a world oil forecast. I mean, the really quote that I like is, we're relatively bullish on the market going into 2022 because we see a relatively strong discipline on OPEC plus side, and we see a postponement of the projects, and we see oil lost in the world, particularly in North America. So what he's quoting is the lack of drilling that's going to be happening due to the lack of capital. I'm a fan of what Ed Morse puts out. I followed him for a hot minute. He was over Citibank is not his first gig. He used to work over at a proprietary prop shop that I followed. So that's how I got to use him. So anytime he puts out something, I'm a fan of it. So, I mean, it's just another slightly bullish case. Now, I think why oil might get up to that point is probably due to the fact that they're seeing and agreeing with what the article that we just covered. Production's probably going to be 16% lower, even when we're completely ramped up. And that's obviously, we talk about, oil is a pure supply demand commodity. It's just supply demand. So if there's less demand, well, price is going to rise. We can draw that. I won't draw the curves for you, but you can do that. Just go Google supply demand curves. You can shift the curve yourself. So I mean, as you can kind of see, the tone that got set this week was there was maybe some bullish news that damps the fire on. And really, I think what the big theme this week was, the markets are solely dependent on what happens with this coronavirus stuff. I know we talked about it for the first month of the podcast. We took a real break talking about the coronavirus because really it not subsided. I don't think that's the right word to say, but it became, I think, a back burner issue. And now I think it could be coming back. And I'm no doctor, so who knows what's going to happen. But that's really, I think, the theme moving forward. And I think that's what's going to impact oil. I mean, as we're looking right now, oil's 37.86 off no other fact than we're just thinking we might have to go into some quarantine. I mean, we ran on the closing bell on Wednesday of this week that mandatory self-quarantine if you're traveling to the East Coast from 6 or 7 states. So I mean, now who knows if that's political or if it's just more of an actual requirement. I'm not one to say politicians do politic things, so that's a joke. But I'm not going to read someone intentions into that. Point is, that's what I'm seeing as sort of the biggest driver. The other story that I have before we hop over to Stu's International News Desk is, one of the things we've been looking on the podcast is obviously, we think capital is going to be available for ESG and offshore. I think those are the two sections that if you're going to be able to get money for, I think though moving forward, I think those are the safest ones. And it's getting even dicey for the offshore. Talos Energy actually had just announced a borrowing-based redetermination and results from the bolt-on acquisition. They had a press release that basically announced that they had a $1.15 billion revolving what we call reserve-based lending facility. It is now redetermined down to $985 million. And they're currently $650 million drawn on that as well. So as you can tell, even offshore is getting hit a little bit, especially if you're in that high debt play. They also did acquire some selected assets from Cascade Energy. It emerged from bankruptcy in 2018, is controlled by first lien lenders. And it's mostly what's like an executive management thing where they're going to come in and just manage the assets. So offshore getting hit a little bit, but also what I like in this is we're beginning to see that asset management. We saw it 2 weeks ago. I forget the story we ran on that, but it was a Permian operator coming in. We're just going to manage your operations, contract everything out. Same sort of thing you're going on in the offshore space, but even their pocketbooks are getting tight. So, if you think, everyone's getting hurt right now, and so it's even these guys. And so I just found that very interesting because I think this is one of the first offshores that we've seen a borrowing base get redetermined from specifically coming through. So it was interesting to see. Anything on the U.S. shale side that happened this week, Stu, that I'm missing?
There was one that's half U.S., half international, and the EI. Excuse me.
You all right?
COVID.
You dying over there? Got the COVID.
COVID. U.S. liquefied natural gas exports have declined by more than half so far in 2020. The EIA put this out, so it's half international, half U.S. And if you take a look, it has the numbers for Sabine Pass, Cove Point, Corpus Christi, Cameron, Eagle Island, and Freeport. All of these are critical ports, as well as trying to get out. So we'll keep an eye on it, but I think that there's some other things going on in the world that will affect that.
Okay, interesting. I like that. So I think it's time. What else you got on the international news desk?
I got a couple things. I've got a source that is doing quite well. Trump, and I'm going to just read the quote. Trump and Duda are scheduled to discuss energy that just happened. The head of the Polish oil and gas company, PGNiG, said Warsaw expects to import most of its gas from the U.S. Pretty darn cool. In the future, since liquefied natural gas is 20 to 30% cheaper from Poland than the gas it receives from the Russian Gazprom, which is the pipeline that Putin uses to beat the snot out of folks. And noted that Poland has already signed up 4 long-term LNG contracts with U.S. firms. The Kremlin has not yet commented on the energy plans. Currently, there are more than 60% Polish gas imports come from Russia.
Whew.
That is huge
That is.
information, big implications. I
Yeah.
got a
What
good source.
and lay out so what do you think is the biggest implication from that? Someone who's not an international savant like yourself.
Well, you have Cyprus, you have Israel, and there is the new gas line
Mhm.
that's coming in from the Leviathan field. That is bringing off more demand from the Russia uh, gas pipeline. You have Poland, you have all these others. The EU is trapped by that Russian pipeline and Putin's ability to control it. And so the price differentiator is going to be the US exports to Europe. Unbelievably cool. Um, so great for US, great for exports. Even the EIA put out that we are we're half in 2020, but
Yeah, I saw that report. Yep.
there is half. There is more on the way. And another international story, Michael, on this is we've been following the sanction, China and all the other folks trying to do the Venezuelan oil across the sanctions. The U.S. sanctions are so strong that there are 16 tankers holding 18.1 million barrels of oil, which between friends is a lot of oil.
Oh, yeah, yeah.
And they are not the refineries are not accepting these tankers because of the sanctions. It's not the countries, it's the refineries. Michael, inside baseball trader note, $33 million a day. No, let me take a look again. I think it's
33,000. We ran this story on closing
it's
bell. It was
man,
33.
it's
No, because
33,000.
we've been ahead of this one, and we've been ahead on this one. When we talk, that was something that this is why, guys, when I pitch the Energy 360 podcast, I'm not kidding with you. You listen to those podcasts, and there are nuggets that you can that are pulled. It's like, oh, well, I had that story 2 weeks ago. The latest one we did with Enverus, it was Rob McBride, Senior Director of Strategy. What did he say, Stu? It's not upstream that's causing all of these bottleneck issues. It's the refineries. And that's what their
And,
analysis showed.
and the refineries in the U.S. just ran this story yesterday. We've had actually in up to 2019 a 3% capability in our refineries, and it's been stagnant for about 15 years. We have not increased our production capabilities in the U.S. Hey, last thing on the international news desk before I throw it over to you. We now have 5 events that people are asking us and paying and working for us that are events that are in Europe, that are in England, Italy, France, and they are asking the Oil and Gas 360 to advertise to our client base. This is huge. Very large people putting out advertising requests to us. Well done, Michael. We are now really, really in demand
Well, you're on TV now, Stu. You're a bona fide TV and interview star. So we need to start requesting, we need to start becoming, what did they say? I need 3 cold bottles of water before every show. I need
oh no.
a masseuse to show up every time before we record and give me a massage.
Well, Michael, you are the reason it is a success. So
I
thank you very
appreciate
much.
it. No problem. And great international news desk. I mean, it's really crazy to see what's happening all around the world and to see what Stu's been able to do with the internationals. It's been unbelievable. But I think it's time. Let's go ahead and check in with the oil levels and see what's going on in oil trading. As always, this segment is sponsored by the guys at Sandstone Capital Group. They do insanely good research and provide all of their levels from their Energy Glimpse solution. I mean, if you need help with anything, research, try anything, give them a call, 949-561-1818, or shoot them a email. You can check out everything at sandstonecg.com. I mean, a bearish week. I mean, if you just want to be straight up, when we look at kind of the overall structure of what happened this week, we obviously started trading $40 early in the week, and we actually got up to 40 high for the week. Let me just make sure I don't get this at 41.61. And so, I mean, if you were, if you look at the 5-day chart, I mean, it really ramped up to 40, and then we had a complete collapse the past 2 days. Obviously, those past 2 days have been as we've said, coronavirus. I won't beat the horn. I think when we look at the levels, oil's currently trading at 37.75. We got if you're looking at a 5-day chart, point of control is ironically still 40.24, which is odd to think that we threw a lot of volume early in the week up there and only recently has tailored off. So, and specifically how I'm looking at it, I'm looking at more of a range chart here. So, I'm looking at a minute chart. Let me go to a range chart here. It shows me structure a little. That's another thing. If you're looking to do some price action stuff, watch range charts. Don't look at minute tick charts. Look at range charts. And I don't want to get too deep into what a range chart is. Maybe we'll put a little training course on the 360 news desk on how to read a range chart, but shows price action much better. When we look at a range chart, structure looks bad. I mean, you're seeing a complete bearish switch early on. Tuesday and Wednesday. Levels for me, 36.78 on the downside, obviously 37.77 or about where we're trading at now is a good level. 38.18, 39.09, 39.48, 40.25 obviously is point of control. My cap's about 41. So there's 4 or 5 different levels for you that I think you could play off of. From here, I guess it'd be very interesting what as we move into the end of the trading day, what happens this weekend. I don't expect oil to close below 37, 36 bucks. Now, as obviously, as we're recording, this market's just now open. So SPY currently trading flat. So at the moment right now, the calms or the coronavirus worries are sort of swelled, but any sort of negativity can drive this down. So we've been good about that. We've been good about the levels. But we need to make sure that we get, now that this coronavirus, the news cycle of coronavirus is really coming back into play. We need to get, because remember, I mean, the website I use when I trade, it's literally called Trade the News, because sometimes that's what you have to do. You have to just trade what the news is telling you. We can get into all the different phrases behind that, but that's why. EIA numbers this week, DOE crude inventories as a whole up 1.5 million barrels, but really the key, we'll get into that. Utilization, utilization stayed flat, no change week to week. Distillate demand down 1,000 barrels per day. Gasoline demand up 700,000 barrels, so that's good to see. Cushing crude stocks dropped to 45.8 million barrels. That's a full million barrel drop and brings it right in between that nice 5-year average. This was the kicker, though. Total domestic production up 500,000 barrels to 11 million barrels per day. So you want to talk about companies bringing production back online. Woohoo! A lot of that is the Alaska production, though. It's about 125,000 barrels of Alaskan production that got turned back on by ConocoPhillips. Again, listen to the podcast. We ran that story a week ago, so you would have projected this. You should have projected this number this week. I'm totally kidding. You shouldn't have. But as we look at the EIA next week, I'll have no idea, but very interesting. I think we might see a couple 100,000 barrels come on, but if we see another 500 number, spicy. Anything else on the oil levels this week, Stu?
No, but got some other future things for us as a team, and we'll cover that in a bit.
Oh, yeah, we will cover that in a bit. We got some cool stuff coming up on all segments, but I think we should go ahead and check in. I don't even know if I want to check in on the 360 fund. Should we? I think we have to do it. It's going to be more of a funeral, but I think we should go ahead and do it. But before we check in for the 360 fund, the lawyers make us say this so we don't get sued. And you don't follow. Why would you want to follow? If you follow my investment advice, you're taking a vow of poverty. That's all I say. This segment is for entertainment purposes only. Everybody in this show, i.e. me, Michael Tanner, and Stu Stewart Turley, invest for our own account. We do not manage any outside money. We do not give investment advice. We give out vows of poverty. We do not offer any type of securities or any involvement in the regulated side of the industry. Investing is risky, and you can or lose your entire principal. One of the many meme accounts on Twitter, I saw somebody who tweeted stock picks. That was his tagline. If you follow my stock advice, you take a vow of poverty. And I laughed. I was like, people on the internet are too funny for me. So I have to give that up to our friends on Twitter. But that being said, Stu, I assume your report, mine was red this week. That's all I'll say. So I assume yours was,
you beat me. But I don't even want to talk about it, dude. When you have that much of a beating, I felt like I was beat like a rented mule. So we'll leave it at that.
I will say this. So Bonanza Creek was our most profitable position. We were up. Basically, I'm trying to put the percentages right. We were up 60% on that. Yep. So we were up 60%. So now imagine that as the whole pie, the 60% increase as 100% pie. We lost 80% of that in 2 days.
Haven't lost till we sold it.
No, we're still up, but we are bleeding. Our natural gas position, we're in at $1.74 for natural gas. $1.54. We're down like $2K on that. We're down like $2,200 on that position. Not good. I was short CL. That sort of worked out for us. So that helped. That was the only saving grace. We still finished wildly down this week.
I want to give you one account that it didn't save me because I don't have enough on our fund.
We need
Geopark out of South America.
Geopark killed it. Good to know. No, and it's the international stuff. I mean, I don't know why I haven't taken that advice and we haven't loaded up on some, international companies, but we need to do some diversification of this portfolio. It's been too stagnant. It's like one of those swamps you come across where it's like, no one's touched this water in 6 weeks. But of course, your dog will come up and drink that water. They have no shame.
LNG looks like it's starting to roll up.
Well, good. Somebody needs to roll up. Anything else? I think this has been a good show. We're about 30 minutes in. We'll let you guys wrap it up. Are we missing anything?
Yes, I just need about 2 seconds. I am extremely excited about our efforts to do extremely large, big, jihugic is a term.
Jihugic. That's what we're going to have to put on the landing page for these.
It is jihugic. It's a cross between giant and huge.
I love it. Have you seen Kicking and Screaming with Will Ferrell? There's this. Never mind.
Okay. Our dashboards. You have been working nonstop on these, and we are going to have financial numbers. We are going to have absolutely for our subscribers that are going to have, you want data, you want financial data, come to us. And we're going to start releasing those next week and got a lot of them rolling out. So Michael, thank you for all your effort on that. And let's get them
I appreciate it. I'm excited to get these dashboards rolled out. And I mean, really if you've been following us for any sort of time, and we don't have a huge follower base, but we have enough people where I thank the people who are following us right now. You sort of, I hope you've seen the evolution of what we've been doing here. I mean, first me and Stu, we just did a little digital ticker show. Now we're moving into a lot more deep arc. We've got a new podcast segment. We created the 360 News Desk to sort of conglomerate a lot of financial news. And and I keep telling everybody, this is the one stop, you follow the podcast that you can know everything about the energy markets by listening to this podcast. And partly why I want to work with these dashboards is I want to bring that data to you guys. And I mean, when you talk about some of the charts we have on the news deck, imagine having imagine having access to all the EIA information visualized for you in one place. Just go click there. Imagine being able to go pull specific, we're not going to do this for every single company. It's where you're going to have to, because these are a nice product, but certain companies that we work with, imagine being able to completely visualize their financial data right away. Imagine being able to see what oil production is the moment. Imagine being able to trade EIA crude oil inventories by looking at our dashboard. I mean, that's the goal, because that's what I want to do with it. Because that's what I want to happen. I want to be able to go to the Oil and Gas 360 news desk, oilandgas360.com/news desk. And that's the only, you should just favorite that. And that's the only place you need to go to stay up to date on the energy markets. That's where me and Stu are trying to take this. And Stu's done an excellent job of getting 360 Oil and Gas 360 up to basically being a news powerhouse. What I'm trying to do is come in and let's add just some cool features. Let's get a little UI. So none of this could be possible without the platform that you've basically grown. So it's a two-man effort, but please, we're going to be rolling out these dashboards next week. We're just going to start slow and steady. We're going to start with crude oil inventories and natural gas inventories. Those are going to update every single week live, because we're hooking it up to a nice API key, doing some cool data stuff on the back end. But we're going to be rolling out a lot more. We're going to be hooking up to some insane databases. They're going to be able to visualize a lot of information. So I am excited, and we'll be getting more of that to you. Follow, again, just check out, if anything, this is an advertisement for the 360 News Desk. I would just go Oil and Gas, go check out the 360 News Desk. Podcasts, daily ticker shows, news feed, charts, overview of stocks. It's everything. Stu, this is awesome. I'm excited. Anything else we need? We covered the dashboard stuff. Any other stories? It's been a crazy week.
Been crazy, and from my sources, it's going to be crazier next week.
It always is. And with that, we're going to go and let you guys get back to work. Thank you for checking out the 360 Digital Closing Bell here on oilandgas360.com. We'll see you guys this afternoon for the Digital Ticker.